Assalamu alaikum. Welcome to Halal Crypto Investing. This video is about crypto dollar cost averaging. So what does dollar cost averaging in crypto look like? That's what we will be looking at. In this video, we are going to explore what dollar cost averaging is, what does it look like, how can it be powerful, when do I buy, when do I sell, what do I buy? So continue watching until the end. Just a disclaimer that this is for informational purposes only, for educational purposes. This is not financial advice. I'm just a voice in the cryptoverse looking for halal crypto projects to invest in and just sharing my views and thoughts of what's happening and going around. If you like the content and what we're going to see, or you're looking for opportunities for halal crypto investing, then subscribe to the channel. So what is dollar cost averaging? Dollar cost averaging is essentially picking a day in the month where you are buying crypto, or generally it could be other things as well. On a particular day, you're just buying without looking at the price. So the first of every month, you're buying without looking at the price, and you are thinking about where the price will be in the future. So what does it look like? Let's look at this. So here we have Bitcoin. And just to kind of go through a few things before I start, the crypto is kind of international. So the price we will be using is dollars. So I'll be talking about dollars. And I'm based in the UK, so I will also be using pounds. So you'll see I'm using investment. Under investment, I'm using the pound sign. So those are just two things just to note. So dollar cost averaging, you pick a day in the month where you're buying without worrying about the price. And you're thinking of the future. So in 3 years' time, 5 years' time, 10 years' time, you are hoping that the price will be higher, and that's when you will be cashing out. So I first came across this idea around 2017, 18. I heard lots of YouTubers talk about, dollar cost averaging. I was new to the space. I got excited by the crypto increases in percentages, decreasing, mainly increasing. And so this is something that I kind of ignored almost because it didn't sound exciting and fun. And this kept on coming back. So dollar cost averaging, and I really properly looked into dollar cost averaging in February 2021. And I thought, you know what, why don't I look at Bitcoin and see what happens? And we look at Ethereum shortly. So here we have the dates. By the way, I'll be using huge estimations and approximations. So if you're someone who is really particular about exact prices, you might as well stop watching now, because I will be doing a lot of that. So just to give you the heads up on that. So here I've chosen the first day of the month, January 2018. So I thought, you know what would happen is I came to crypto at the highs of 2017 when Bitcoin hit 20,000, and I dollar cost averaged from there. And so on the 1st of January 2018, the price of Bitcoin was $14,093. And let me just go through these columns. So the date, the price, the current price. So I did this on the 10th of February 2021. And then what kind of percentage is it based on the current price? So here at those prices, you would be making a profit of 454,000. I think at the time, actually, I just edited that. This was about $40,000, I think, if I remember correctly, 10th of February. I've been tweaking this just before I started this video. So I'm going to use 40,000 as an example. On the 1st of January, the price, the value 40,000. So this column here is the profit or loss you're in. So if it was at 40,000, you're at 284%. return. This column, investment, how much you're putting in and the value it would be worth, that £50 would be worth today. So here we have Bitcoin. And let me just go through that. So on the 1st of January, it's 14,000. Then February, 10,000. Then March, 10,000. April, 6,900. May, 9,000. June, 2018, 7,400. July, 6,300. And so you can see the prices are going lower, all the way down to below 4,000, 3,600, 3,400, 3,800. And then goes back up. You can see 10,000, 10,000, then it goes back down again, 7,000, 9,000 goes back up. And so then it goes all the way back down to 6,000. Then you can see a slow increase in price from August or September rather, or October. So 11, so 10,000 from October. November becomes 13,000. December it becomes 19,000. January 29,000 and February to 33,000. So you're kind of going from the top to the bottom to the top again. And I've color coded it as well. You can see there slightly reddish to greenish when it's really low, and then really red when you're buying it at a high price, relatively. And you can see here, I'm investing £50 a month. And so over a course from 2018, January to February, the investment you have invested is £1,900, and the value of your investment has become £9,900. So you've got a return of 523%, a profit of 423%. So this is just a simple dollar cost averaging, no kind of nothing special about it, just simple buy. The investment, you can increase it to £100, for example. The value of your £100 is now £3,800, and that is worth £19,900. So a return of 523%. If you increased it to £1,000, you've invested £38,000, and your return, the value of your investment, becomes 199,000. So this gives you an idea of how things are. And so the idea of dollar cost averaging is you're investing something that's small for you, and you're not worried about, you're not losing sleep over it. That's really important. You're investing something, you're thinking in 5 years' time, I'm looking to sell. That's the purpose behind it. So Bitcoin was the blue chip. That was the main crypto asset in 2018. If you look at Ethereum, that was number 2. Now, Ethereum is number 2 in the crypto space, was number 2 in the crypto space at the time. But it's riskier than Bitcoin. And so because you are going for a more riskier asset, you are expecting a bigger return. That's really important, because if you're looking at altcoins, if you're going for something more risky, you should be getting more reward in return. So that's really important. And I'll touch on this later on in the video. So if we look at Ethereum, similar thing, date, 1st of the month, price in dollars, the price at the time, 2,300, the investment, again, £50 I've put down, and the value of it. All right, so here you can see Ethereum, you've bought at 777, 1,100, then it goes lower, 800, 300, 96, 600, 500, all the way down to nearly $100, 114, 132, 107, 136, 144, and then Ethereum went all the way up to 1,300 on the 1st of February. And at the time, the price of Ethereum was 2,300. So your total investment, if you were to put in £50 a month, became 1,900 in total, and that gave you a value, an investment value of £18,000. The return is higher, 974%. So a profit of 874%. So that gives you an idea. You are risking more because it's a riskier asset, and you are getting a bigger return. So that's really important. We know Ethereum went to a higher price. What type of price did it go to? Near $5,000. let me be a bit more precise. Let's call it 4,600. 4,600. And so your 1,900 investment becomes 37,000 based on a £50 a month one. And your return becomes much bigger, 1,900%. I'm going to go back to the old one, 2,300. So that investment, £50 a month, if you were to increase it to £100 a month, that becomes £3,800, is worth £37,000. Obviously, I'm not using the peak top. Again, I'll mention that briefly shortly. So this gives you an idea of what it looks like. So dollar cost averaging, how can it be so powerful? How can it be powerful? First of all, this is really big. It's way less stressful. The amount of stress when you're looking at the prices, is it going up, is it going down? You're not worried about that. You're thinking about the future in 5 years' time, 3 years, 3 to 5 years' time, maybe even longer. So there will be relative, volatility. Prices go up, prices go down, but you're not really interested in that because you're interested in 5 years' time. It's passive. Dollar cost averaging is passive. So again, you don't need to worry about things too much. It's automated. It's automated. So you can, on certain platforms, reliable ones, Coinbase, Binance, Kraken, there's so many platforms now, you can automate it. So you can log on to those platforms and automate your buys on the first of every month or once a week or once every 2 weeks, and automate it. The other thing, again, it's obvious, but dollar cost averaging, you're not hitting the bottom and you're not hitting the top, but there's a big chunk in the middle that you're getting. So you're making these huge gains over time, and that's why it's powerful. When do I buy? So this is going a little bit more kind of into detail. So dollar cost averaging, you can buy straight away. So the spreadsheet I used gives you an idea of if you were to buy it from the highs of 2018. So you could just do it straight away. You could be a little bit more smarter if you like, and you thought, okay, I'm not going to buy at the high. I'm going to wait until it's below 50% or below half of the all-time high price. So using this spreadsheet, if I go back to this spreadsheet on Bitcoin, Bitcoin was at 20,000. You're not going to buy anything if it's below, say, if it's above $10,000, you're not going to buy. So here I can put in just to see what it looks like. Here the prices are above. So here you've not bought above 10,000, and here you have prices that are above 10,000. So I've deleted you can see these prices, Bitcoin prices are above 10,000, so I've deleted them. Your investment now is 1,400. Your value becomes £8,000. Your return is 597%. So your profit has increased. So that's one strategy you could use. Let me put these back in. So that's one thing I'm showing you. The other thing you could also do is, when do I buy? This spreadsheet shows prices, just you're buying without, thinking. The other thing that you may be noticing, as price goes lower, you can increase your buying. So if I just do what I've just done, if I do a combination of both, as I notice that it's really low, I can start increasing my purchasing. So instead of being £50, it's now £100. The lower it goes, what happens to my return? It's now increased 596%. So you've invested £2,000, it becomes 12,000. Your return is 596%. So you've got a profit of 496%, roughly 500% profit. So that gives you an idea of just being a little bit more smarter, if you like. But again, nobody knows the future. But as you're buying, because you're buying, you are more aware of the prices, and so as it goes lower, you can buy. The When do you sell is the other question. By the way, I just want to illustrate something before I forget, which is that the power, all of this looks great, but this is based on history where everything's, good. I've put here 40,000. If you put Bitcoin went to 64,000 at one point, your return would be 837%. Now, this is great because it's working. What happens in bear markets when prices are lower? So let's say Bitcoin went to $2,000. Your investment is £1,900. Your value at the time is £497. Your return is 26%. You've made a loss of about 75%. So this is what it's like in a bear market. So if you're watching this video in a bull market, then this is what it feels like at the time. In a bear market, things are low. When you've invested your money, your £100 is now worth £26. That's not a good feeling. So this is why this is why dollar cost averaging in that sense becomes important, and keeping in mind your 5-year goal or your 3-year goal, whatever it is that you've got, what time frame you have in the future. So when do I buy? When do I sell? So again, lots of different strategies you can use. The first and obvious one is on profit. Whenever you're on profit, you can sell. You can use psychological levels. So previously, Bitcoin went to 60,000. You could sell at 60,000. You could sell at 70,000, 80,000. 100,000 is a psychological level. So you could be a bit more, you might think 99,000 or 95,000. If Bitcoin keeps going higher, 150,000, these are psychological numbers that you can sell at. You could also have a different strategy, which is partial profits on previous highs and new all-time highs. So Bitcoin went to 64,000. You might be thinking, you know what, when it goes back to that price, I'm going to sell half of my investments. And then I'm going to wait for new all-time high prices, and then I'll continue selling. So that's another approach. You could use dollar cost averaging out, just like you've dollar cost averaged in, you can dollar cost average out. So just for simplicity's sake, let's say you bought 0.1 Bitcoin a month. When Bitcoin goes back to its all-time high prices in a bull market, you sell 0.1 Bitcoin per month. So that's another strategy you could use, because nobody knows the highs, nobody knows the top. These are just bragging rights. I bought the bottom, I sold the top. Majority of people are not able to do that. And also dollar cost averaging, we're looking at the big chunk in the middle. That's what we're interested in. We're not really hitting the bottom, and we're not really hitting the top. The last approach, out of others that you could think of, is looking at the fear and greed index. So look at the crypto fear and greed index. And whenever the fear and greed index is really high, you sell. So if we look at it historically, the fear and greed index has gone to 90 in June 2019. It's gone to November 2020. You can see those. It's gone to these high levels of above 90. Here you have in 2021, you had above 80%. So again, this is more about trying to time the market. So you're kind of selling on highs. If you play around with those kind of things, you may not necessarily hit the highest possible values, but yeah, it's a strategy. It's another strategy. So those are tools that you can use, strategies you can use. So the next thing, what do I buy? What do I buy? So first and obvious one is halal assets or halal crypto projects. So I first got introduced to crypto at university, where I met someone who was doing software engineering. He talked about Bitcoin. I thought it was interesting. This was 2014. Sorry, 2004. What am I saying? 2014. Yeah, 2013, 14. Am I getting my numbers right? Yep. And then 2015, I met another friend who was mining Litecoin in his computer. Roughly those are the years. I might be off by a little bit. And then in 2017, Ramadan 2017, I met another friend, and he was telling me about Bitcoin. And at that time, the all-time high price of Bitcoin was $3,000. I thought, okay, this is interesting. Then it went up to 3,500, and then it kind of crashed. And because I kind of bought it, it was telling me it's halal and so on. I thought, okay. Then I went to a cryptocurrency course. Sheikh Faisal Manju, he was a specialist in Islamic finance, and he was saying at the time that, you know, more research is required. There are opinions. There were 3 opinions. 2 of them were it's halal. One of them is that it wasn't halal. So I listened to him and I researched into it, and I was convinced that this is the future. So because this is the future, and it doesn't go against the principles of Islam, it's a muamalat thing to do with people. Let's buy it. So that was my first initial thing. Is this a halal thing? And then looking into it. So Bitcoin is halal. Ethereum is another project. So looking at your assets. So the first thing you look at is whether it's halal or not. The next thing is, will this asset exist in 3 to 5 years' time? Or it could even be longer. Nobody knows the future. The bear market could continue. So you have to have that ability to have patience. You can't be losing sleep over this. If you're losing sleep over it, then you've probably invested too much. What do I buy? Look at blue chips. Bitcoin is now a blue chip. Ethereum is now a blue chip. So you're looking at blue chips because they are more likely to exist. And if you decide to go for more riskier assets, then you can mitigate your risk. You can manage your risk. So for example, if you're looking at altcoins, other layer ones like Cosmos, like layer twos, Polygon and Solana layer ones, you know, those are higher risk, but you can mitigate your risk by, rather than investing £100 a month, it could be £50 a month, £25 a month. So you can manage your risks. If you're putting a lot of money in, again, using different exchanges so that, you know, you are, if you're not holding it yourself, you're kind of managing that risk if something goes bankrupt, like FTX and so on. So these things do happen in crypto. So you need to look at ways to manage your risk. The biggest thing is make a plan. If you don't make a plan, you are going to go through these cycles of huge gains and huge losses potentially. When I went through my bull cycle, I only invested a little bit of my money, and it was like a year's salary, 2 years' salary. But I didn't really have a plan. I did take some profit, but without profit, because when the time comes to sell, you know, you get greedy and you think, you know what, this is going to go up. So if you don't make a plan, it's very hard to kind of take profit. Make a plan, and, you know, if you can't stick to a plan, always take profit, because you never lose money. You've never made never make a loss by taking some profits. So making a plan and constantly evaluating your plan. If you are looking at your portfolio and you're thinking, you know what, I can buy a house or this or that, or you're thinking, you know what, this could be, you know, wealth that is generational. When you have these kind of high ideals, that's usually a sign that you need to start selling. And if you don't want to sell, that's another indicator sometimes. So these are the things and feelings that I've gone through personally. Some of these I've kind of maximized on, and some of these I haven't. And it's really painful. And I've given you an example of when you see your portfolio down by 25%, and that's just Bitcoin, by the way. Other assets go down further. So make a plan and stick to your plan. If you've found this video useful, like and subscribe to the channel. And hopefully you will make huge gains in crypto. And I wish you every success, and may Allah bless you and put barakah into your wealth. And that's all for now. All the best. Assalamu alaikum.